Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It is March 16th, 2012, and like we do every Friday, I'm going to go over all the different market charts that we track, global markets, U.S. markets, and show you what I'm looking at and what I see moving into the week ahead so that you know everything that I know looking at these charts. The first thing I want to look at is AORD. This is going to be a long video because I'm going to show you guys some multiple time frames here. The first thing I'm looking at, like I said, is AORD, Australia's markets. And you'll notice that we have pulled back up to this previous resistance level here. We've jumped up here, and then for the past 2 days, we've just simply consolidated, moving sideways in a little drifted sideways pattern here. This is not likely the start of a big move here. I expect it will probably keep moving sideways here for a little while until the markets roll over. We may actually see a breakout here like we've seen back here, but I wouldn't buy it, and I'll show you why in the longer term charts. Okay, this is the AORD 1 year weekly chart, and you're looking at actually about 1 year and 3 months, and each one of these candles is 1 week's price activity. The reason why I wouldn't buy this is you've got lots of overhead resistance. This previous high point here is going to be acting as resistance. This previous high point here, resistance as well. You got the resistance of the 50-day and the 200-day moving averages right here and here. You've also got previous areas that were provided support. Once they break down, support turns into resistance. That's there. We got another one here. These are a lot of things that are going to keep a lid on any move to the upside here in the Australian market, so I'm not looking at being a buyer on a breakout there, okay? The Dow Jones Industrial Average, I talked about the markets getting to a point where they're just getting overbought. And nearing that overbought condition at least, and I'm not interested in taking positions at that point. And we're there now with the Dow Jones Industrial Average. I didn't buy into this one. I traded other stocks or other averages. This one I let pass by me. If you are long, what you want to do is have a tight stop on the position and keep advancing that stop to low of each day's candlestick formation, and just keep advancing it as new candlesticks are created. Right now you're not stopped out, but if you are, I would just walk away from it. Right now, if you really want this to be sustainable, you need to see this ultimate oscillator move up here and be higher than this one. If you don't get that, you're getting a bearish divergence, and that's me telling you that this move here is unsustainable, which it would be not a good thing. Also, today's volume activity on this day much larger than any of the other days. If that's sell pressure, then that's a bad sign for moving even higher. Though you are still seeing higher highs and higher lows, so you're still in an uptrend. You can keep pushing that there. This is just not the place where I would want to be a buyer. The French CAC 40 index, this one's actually a really strong chart on the 1 year weekly time frame. But here, looking at the actual chart pattern, you don't want to be a buyer here either. You've got 1, 2, 3, 4, 5, 6, 7, 8 consecutive days to the upside. Look anywhere on this chart. You will not find 8 consecutive anything up or down. So you're just getting overextended again. You can keep doing it. I can't call the top here, but I can tell you that I don't want to be a buyer here. So if you got a pullback in this one, a really good pullback, and I got a good buy opportunity, I may take that. But right now, I wouldn't be a buyer of this market. German DAX market, if you're looking at Germany's markets, you're looking at basically the same thing as the French market, at least from the current situation with the, 8 consecutive days to the upside here. That's above average. You need a down day in here somewhere. Also, you'll notice this high point here, lower than this high point here, potentially forming another bearish divergence, which is basically telling us this move here, even though we're making higher highs here, the corresponding time frame, we are not actually, if it's not being supported by momentum, it will not be sustainable, and it eventually will fail. So again, I wouldn't be a buyer here either. Gold is showing potential for a bounce higher, a reversal move higher. This is something you should be watching. I am definitely watching it here. I've attempted to trade it once already, been stopped out, and that was just the way that works. But what we have here is a bullish divergence forming. Note the low points here on the momentum trending higher, and the low points of price activity for the corresponding time periods trending lower, where the closes, if you would analyze it that way. You can see that we're trending down here, but that basically means that this move to the downside is actually unsustainable. You should be looking for a reversal back in the other direction. That's why I made this buy here. It ended up being premature, and she went lower. We're going to continue to see this until one does stick. You need to watch the dollar for this. If the dollar gets weaker, gold will be in tandem stronger, and it will move higher as the dollar goes lower. However, I'm going to show you the dollar chart in a minute, and that's why I'm not buying this chart. I'm not buying it here, and I'm not even going to mark it as being something that I would buy if you got a higher high the next day. I'll show you why when we get to the dollar. The Hong Kong Hang Seng Index, we did trade this one to the long side back when we had the opportunity back here, and made some money at the upside, advancing to stop along as we went. Our target was a previous high. You basically reached that point, and you could have taken some profits intraday there. If you didn't, you got stopped out the following day, and so you should be out of this trade. The issue I have with this particular chart is that you have a series right now of lower highs here and here. This is not bullish, of course, especially being that we also have a series of lower lows. So you could be seeing a rolling over of this chart pattern, which I don't want to see if I'm long. So I'm not long at the moment. I'll keep an eye on it and see if something better develops. The India Bombay Stock Exchange, we warned about this one a few days ago, I guess about 3 days ago, and that's exactly what we should have done, because she turns around and moves down on us here. And she can keep going lower. I'm not going to be a buyer here until I get a really quality entry opportunity. I wouldn't mess with it. Also, this move here to 1800 basically pulls back down, jumps up here to 1840, but it doesn't do it convincingly. You get basically weak candlestick formations, put it that way, and then she moves back down here. I don't like that. Had she broken out here and then pull back, yeah, I'd be a buyer there, because she had already made a series of higher highs. I'd expect the low point to be higher than the previous one, and we'd start reversing, but we're not seeing that right now. So unless something changes right now, I'm just not liking this chart from a long perspective. One of three things happen with the Japan iShares. Either A, you missed the boat like I did because it just gapped up too big by the time that you issued the alert, or B, you chased it and then you were stopped out with either a small gain or a small loss, or you're now at the point where you're at you somehow traded this and you were looking at making money to the upside. Our overall call was a test of the previous high, so you should be taking profit here intraday, or otherwise I'll be walking away from it at this point. The London Financial Times Index, the FTSE, this one is the it's about 15-month chart. Each one of these candlesticks represents a single week. I'll show you the short term in a moment, and you're basically going to see that it's showing signs like it might break out to the upside. This is basically the same situation I talked about earlier, where you have breakout signs that I wouldn't buy simply because you have all this resistance levels to deal with here, here, and then I'm thinking another one over here somewhere slightly higher. All that there is not something I want to buy into with all that overhead resistance there. Just leave it alone. If she runs past me, fine, she'll pull back to it later and give me a better buying opportunity than now. Again, the ultimate oscillator is above the 70 line. We're getting into overbought conditions again and again and again in these markets. I'd be cautious in this market right now. Okay, here we are looking at the shorter term FTSE. You can see that the daily candlesticks do show a breakout to the upside, and that's what people are playing on the long side. At least that's what they're hoping to be playing, is a breakout to the upside. But like I said a couple days ago, you got this sell signal here showing that there's resistance at that level, same level that you saw before. Those are those overhead resistance lines that I just showed you on the longer term chart. Okay, on the NASDAQ, we were stopped out of this one actually early. Did reach our target of being the test of the previous high, so you could have made some money on that trade. Or you could still be in this because she's still making higher series of highs and higher series of lows. So if you are, keep yourself tight stop on the lows of each day's candlestick, and know that no market goes straight up. At some point, you're going to get knocked out of it, and that should be the case. You'll also notice that we are monitoring this previous high point here. We want to see if this moves to the upside, continues to move to the upside. You want to see the ultimate oscillator actually go higher than it did before. If it doesn't, you're going to end up with that exact same thing we talked about in the past, where you've got a bearish divergence. Right now, this one looks like it may shake it off, so we're not going to worry about it too much. I'm not long at this point in time, but I've already shown you yesterday, the day before, I showed you the long-term picture on the NASDAQ. The RSI is reaching the overbought condition. You should be exiting. Also, the volume on today's activity, the down day, shows a greater volume than any of the other previous days. I would be taking profits just like somebody else is. Oil is a speculation play ahead of well, the summer, basically expecting oil prices to be higher or some kind of volatility over there in the Middle East. What we also have on this chart, and thus far as I've been able to shake it off, is the potential, and I use the word potential here, for a head and shoulders pattern. When you had a nice move to the upside at some point in time, you can see what forms like a head and shoulders pattern. The first shoulder, the head goes higher, it pulls back down, then you get a second shoulder. Typically they will peak at roughly the same level as the previous, and that's basically what's happened here. So what we have right now is a head and shoulders pattern that's not confirmed yet. It will be confirmed when it breaks and closes below the neckline. This line here, this dotted line, indicates the neckline. If you break below that, then you look for a move lower. This distance here times the, or subtracted from the breakout point. So you'd be looking for a move like this, and then you'd be considered possibly a buy move. Again, we'll have to wait and see. There is some bullish signals here, though, on the same time, and that is the fact that you do have this downtrend move here. Was going on like this, and then you had this same time. We talked about this, why I actually took this buy opportunity back during that time period, because you are getting a bullish reversal signal at this point. So you could be playing it on the long side as well. My stop has already been triggered. I was out, so I'm done with this trade unless I get a pullback and then maybe something else I might mess with. But right now I'm just leaving it alone. Okay, now we're looking at the US dollar, the bullish index fund, and the UUP. This one, it's very interesting to me. I like it. It's at first I thought we had a breakout here where we were obviously seeing the start of selling in the markets. People were selling stocks and buying the dollar, and of course we're not buying the dollar directly, but indirectly buying the dollar, which is driving the price of the dollar. I still believe that to be true, that even though we have a sell move now, the thing you got to realize when you look at this chart, you notice this high point here comes up, and then she pulls back down, makes a low point. Now she comes up and takes out this high point. Well, what happens next is very important. If we get this move here that does not go lower than the previous, if we were to stop in this area somewhere, who knows where, but if we pull back and do not make a lower low, this low point here of 21.74 is the key point here. If you do not make a new low and you start getting reversal buy signals here in the US dollar, you're going to be seeing that about the same time that you're seeing two other things happen. Number one, US stock markets will start to be showing resistance and they'll start selling off, and gold will start finding resistance and it will start selling off. Here's the deal. When the dollar falls like it has today, you'll see strength forming in the gold, things of that nature. So that makes sense to see that. But when this guy turns around, you've already got a breakout of the highs, then you'll have a breakout of the lows. You'll have a series of a new uptrend forming here, and that'll be a bearish sign for stocks. So that's something I'm watching right here. It also confirms my overall view on the markets that they can continue to push higher, but they are in overbought territory and they need a pullback. So this is just something that I would be watching closer than anything else next week. The Russell 2000 Small Cap Index, this one is still in an uptrend. You could be advancing your stop along the way. Main thing here is that you have already reached the target. Target was here, previous one. Someone mentioned that before, back when we were trading sideways here, I was looking for a breakout as being the buy opportunity. That was then, this is now. As the market, as each day's candlestick is formed, the new information changes the way you would analyze the market. So here, people will again be looking for a breakout. However, again, go look at the longer term chart, the 1 year weekly chart frame, or the 15-month weekly chart, and you'll notice that you have again multiple lines of resistance ahead of you, and that's another reason why you're seeing so much problem at this level, is because they're just running up here knowing now there's too much resistance up there to pull away again, and again. And now we may break out this time, so you may buy it, but if you do, keep a tight stop on it. I would keep a stop at this level here. If you get a breakout and be a buyer and then start advancing, my stop would be a very short-term trade, because I believe you won't go very high before you hit more resistance and start to fail. The S&P Large Cap Index, this one we didn't actually trade on the long side, though we had an opportunity. We didn't take this one, and I don't really have a problem with this. You can be advancing your stop along the way to the low of each candlestick formation if you would. You could do that successfully. However, on the longer term chart, I'm not going to show it to you now, but it looks basically like the longer term chart I showed you for the NASDAQ yesterday, and basically they're both getting to the overbought condition on the RSI. And overbought on RSI on the long term chart is a major overbought condition, so it's something that you definitely need to be aware of, not just be buying blindly and going on vacation here. This is some serious overbought conditions we're starting to see develop. Silver is much like the gold chart, of course, though, and this is another reason why I'm not buying the gold chart. This downtrend here is not confirming what we're seeing on the gold chart. What we're seeing a bullish divergence on the gold chart. It's not being confirmed by the silver chart, and therefore, if anything, it's just not as strong of a bullish divergence that we'd like to see. We'd like to see it confirmed, and we're just not seeing that right now. And therefore, I'm not buying gold, of course. I've already talked about that, and I wouldn't be buying silver either. Canada's TSX market, this one's being pulled down with gold and silver. You get a little boost out of gold and silver. You may get a boost in this chart, and you need one, because if you don't get it, you're getting a head and shoulders pattern forming, and that's not good, not for the bulls. So what we have here is this first shoulder, and we could draw it this way. First shoulder here, head here, second shoulder about the same level here, and you'll see that you're actually rolling over now. Now we have bumped back up, but we just haven't been able to break any new ground here. So we may just end up rolling over, eventually closing below this neckline, and that would call for a move lower of this distance here. From the breakout point would be down, back down around that area. So that's something to keep an eye on. You've also got this major unfilled gap down here to deal with. So there's things there that I don't like on the long side, and I'm not going to try to buy it. I've already been stopped out this time here, so I'm just to walk away from this trade. The volatility index, or the VIX, this runs the inverse of the S&P 500, which basically covers about 70% of stocks in the U.S. markets. Whenever you're looking at this, if it's moving to the downside, the S&P is moving to the upside. Ultimately, that's basically how they work together. And we can see more move to the downside here, but the VIX is something that I really want to keep keep an eye on it really close next week and the week following. When you start to see a peak form in the U.S. markets, you're likely going to see it better via the VIX. So keep an eye on it. Right now we are pressing down lower. What we had here is this first move here, which traded to the downside. You got stopped out at this point here, and then you'll notice what we were basically doing was that low point, which is basically temporary low point, while we move sideways, and now we can see the second leg to the downside. And actually, it could form that way, it doesn't have to, but typically you'll see a move like this, then sideways trading activity, and then she breaks back to the downside like she has again. Notice low point lower than the previous here, so this could call for another move of about the same size here to the downside. Doesn't have to, but it can. That means that we could have another week or two to the upside in the markets before they peak as well. So I'm not calling a peak immediately. I'm just telling you, be really cautious in this market. Also, I'm be looking for a buy opportunity at the bottom of this VIX move if I can get it, a safe one. Okay, so that's something else I'm watching. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. God bless, take care, enjoy your weekend, and I will see you all on Monday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.